As the United States grapples with economic uncertainty, the upcoming announcement from President Donald Trump on April 2, dubbed Liberation Day, is poised to send shockwaves through the nation's financial landscape. While Trump paints this day as a pivotal moment for the country, a chance to reclaim lost respect and economic standing, economists warn that the measures he plans to unveil could do more harm than good, exacerbating inflation, inequality, and fiscal instability. In a recent episode of the Wall Street Journal's Take on the Week podcast, an economist weighed in on the current economic climate, discussing the competing threats of recession and stagflation. The conversation highlighted the precarious balance the U.S. economy is navigating, with rising prices and stagnant growth posing significant challenges. The economist noted that the signs of a slowdown are unmistakable, referencing a confluence of factors including labor market fluctuations, supply chain disruptions, and consumer sentiment that could tilt toward recession if not addressed effectively. Trump's forthcoming tariffs are a central point of concern. The New Yorker's analysis underscores that these tariffs will elevate the overall tariff levels in the U.S. to their highest since World War II. This aggressive economic policy is intended to protect domestic industries but is likely to backfire. The anticipated tariffs are expected to increase production costs for American businesses, ultimately leading to higher prices for consumers. The implications of these tariffs extend beyond mere economics. They threaten to deepen existing inequalities by disproportionately affecting lower-income households who spend a larger portion of their income on essential goods. As experts weigh the potential impacts of Trump's policies, they draw parallels to the 1970s, a decade marked by stagflation, where inflation and unemployment rose simultaneously. If we are not careful, we could find ourselves in a similar predicament, warned the economist featured on the podcast. The repercussions of such a scenario could be dire, leading to a prolonged period of economic malaise that would hinder growth and erode living standards for millions of Americans. Critics of the Liberation Day tariffs argue that rather than liberating the economy, these policies could entrench it in a cycle of protectionism that stifles innovation and competitiveness. As noted in a report by Mint, the economic fallout could include a significant rise in prices, a slowdown in growth, and increased fiscal challenges for the government. This is a classic case of short-term gains being prioritized over long-term stability, the report cautioned. In the face of these looming challenges, the public and economists alike are left to ponder the future trajectory of the U.S. economy. As Trump prepares to unveil his ambitious tariff strategy, the broader question remains: will these measures indeed chart a new course for American prosperity, or will they usher in a period of economic turmoil that could take years to rectify? As the date approaches, all eyes will be on Washington, waiting to see how the nation's leaders will navigate these turbulent waters. In a rapidly evolving technological landscape, two significant developments emerged on March 31, 2025 that highlight the intersection of politics and innovation in the realms of cryptocurrency and artificial intelligence. As the Trump family intensifies its foray into the cryptocurrency sector, a new player in AI evaluation is making waves with an open-source solution aimed at enhancing the reliability of AI systems. The Trump family's latest venture into the cryptocurrency space has garnered attention as they announce plans to establish a Bitcoin mining operation. This move aligns with a broader strategy to capitalize on the burgeoning digital currency market, which has seen renewed interest amid regulatory discussions and fluctuating prices. According to the Wall Street Journal, the Trump family views Bitcoin mining as a lucrative opportunity, particularly as energy costs stabilize and the technology matures. This initiative not only reflects a personal investment strategy but also signals a potential political endorsement of cryptocurrency, potentially mobilizing a segment of the electorate that is enthusiastic about digital currencies. While the Trump family's crypto ambitions unfold, the AI landscape is witnessing a pivotal moment with the launch of the Arthur engine, the first open-source real-time AI evaluation engine. Developed by Arthur, a company specializing in AI performance monitoring, this tool is designed to help organizations effectively manage and improve their AI systems. Ashley Nader, the lead AI PM at Arthur, stated, "AI is moving fast and we need to ensure it moves in the right direction. Open sourcing the Arthur engine puts powerful AI evaluation tools into the hands of developers, researchers, and builders worldwide. The Arthur engine promises to address critical challenges in AI such as data leaks, model degradation, and debugging difficulties by providing real-time monitoring and customizable metrics. As AI adoption accelerates, the risks associated with its deployment also escalate. Harmonic Security reports that approximately 8.5% of employee prompts contain sensitive data, highlighting the necessity for robust evaluation mechanisms. The Arthur engine's capabilities including active guardrails to prevent misinformation and model drift are timely interventions in an environment where AI systems are increasingly integral to decision-making processes across industries. Sherry Su, technical lead for machine learning at Arthur, emphasized the significance of this release, stating, "By open sourcing Arthur engine, we're making AI trust and safety accessible to all developers, allowing them to safeguard AI systems with fully customizable high-performance monitoring tools." This open-source initiative not only democratizes access to advanced AI evaluation technology but also fosters innovation by encouraging collaboration among developers. The convergence of these two developments, the Trump family's Bitcoin mining venture and the introduction of the Arthur engine, speaks to a broader narrative of technological empowerment and the potential for both profit and ethical responsibility in the digital age. As the cryptocurrency sector continues to navigate regulatory challenges and the AI field strives for transparency and reliability, the implications of these advancements will likely resonate throughout the coming months. Looking ahead, stakeholders in both the cryptocurrency and AI sectors will need to adapt to ongoing changes in technology and regulation. The Trump family's strategic moves in crypto could reshape political dynamics, while the proliferation of tools like the Arthur engine may set new standards for AI accountability. As these stories develop, the intersection of technology and politics will remain a focal point for future discussions on innovation and governance. In an economic landscape marked by uncertainty, marked by tariffs and trade wars, investment strategies have become more crucial than ever. Amidst this backdrop, John Dorfma, an investment manager and contributor for Forbes, sheds light on the potential of mid-cap stocks as a viable option for investors looking to navigate these tumultuous waters. Mid-cap stocks, defined as companies with market capitalizations between $1 billion and $10 billion, present unique opportunities that are often overlooked by institutional investors and analysts. This can lead to undervalued stocks ripe for investment. Dorfman emphasizes that mid-cap stocks tend to be less reliant on global supply chains compared to their larger counterparts, making them more resilient in the face of international tensions. "I've always been partial to mid-caps," he explains. "You're more likely to find a bargain in a stock that's analytically neglected than in one that's widely followed." This perspective invites investors to explore stocks that could yield significant returns if market conditions improve. Among the 5 mid-cap stocks Dorfman recommends, Axos Financial Incorporated stands out for its robust performance. Launched in 2000, Axos operates primarily online and has achieved a remarkable 20% annual growth rate over the past decade. The bank's resilience amid economic disruptions is evidenced by its 21% stock increase over the past year and an attractive price-to-earnings ratio of under 9. Conversely, Meritage Homes Corporation has experienced a downturn, with its stock down 18% in the past year. Despite challenges in the homebuilding industry, such as high home prices and reluctance among homeowners to sell, Dorfman sees potential for recovery. The company's return on equity stands at 16%, and with its stock trading at just 7 times earnings, it may present a compelling buying opportunity for investors willing to bet on a market rebound. United States Lime and Minerals Incorporated offers a different appeal. With a higher price-to-earnings ratio of 23, the company has a strong return on equity at 24% and a solid net profit margin of 34%. Its low debt levels at just 1% of equity highlight its financial health, making it an attractive option despite its higher valuation. Academy Sports and Outdoors Incorporated presents an interesting case, having seen its stock drop 31% in the past year. Despite a decline in profits, value investors have begun to take notice, with the stock now selling for a mere 8 times earnings. This suggests that the market may be undervaluing the potential for recovery in the sporting goods sector. Lastly, Dorfman points to Seadrill Ltd, an offshore drilling contractor, as a stock poised for upside. The energy sector has lagged behind the broader market, presenting a unique opportunity for investors. Seadrill's stock price has dropped nearly 50% in the past year, trading at just 4 times recent earnings. Given the current political climate favoring domestic energy production, this stock may be undervalued relative to its potential. Reflecting on his previous recommendations, Dorfman notes that his last column on mid-cap stocks yielded a 17.1% return over 12 months, outperforming the Standard & Poor's 400 mid-cap index. This historical performance lends credibility to his current picks, although he reminds readers that past performance is not indicative of future results. As investors look to diversify their portfolios in uncertain times, mid-cap stocks may offer a pathway to growth that is both strategic and informed. The potential for finding hidden gems in this often overlooked segment of the market is significant, and with a careful approach, investors may find themselves well positioned for future gains. With the economic landscape continuously evolving, keeping an eye on mid-cap stocks could prove to be a prudent investment strategy moving forward. In a landscape where leadership can make or break a company, Ed Bastian, CEO of Delta Airlines, stands out as a beacon of success. His journey from chief financial officer to the helm of America's most profitable airline illustrates not just a personal career trajectory but also a fundamental shift in how corporate leadership is perceived. A recent article from Fortune explores how Bastian has harnessed his financial acumen to foster a company culture that prioritizes both employee satisfaction and customer experience, ultimately leading to remarkable financial outcomes. For over 15 years, Delta has charted a unique course under Bastian's leadership, often diverging from the strategies employed by its competitors. As Sean Tully noted in his in-depth profile, while other airlines focused on competing through lower fares, Delta made a strategic bet on enhancing the customer experience. Tully highlights that during the COVID-19 pandemic, when many airlines were forced to cut costs and scale back investments, Delta instead chose to invest in its infrastructure and services. When the pandemic pressured the industry to slash capital investments, Delta kept building, Tully writes, illustrating Bastian's long-term vision. This philosophy has paid off. Today, Delta holds the title of the largest U.S. air carrier by revenue, a position it has maintained through innovative practices that foster customer loyalty. Bastian's approach combines elements of salesmanship, a flair for public relations, and a thorough understanding of financial management. As Tully points out, this unique blend has helped Delta not only survive crises such as a recent non-fatal crash in Toronto but also thrive. Bastian's leadership has yielded impressive metrics, including a higher revenue per seat mile than its competitors, bolstered by non-passenger revenue streams such as partnerships with American Express. Bastian's success story is particularly noteworthy amidst a trend of elevating finance chiefs to CEO roles. With an increasing recognition of the strategic importance of the CFO position, experts like Sean Cole from Cowen Partners suggest that CFOs are transitioning into chief executive roles due to their operational insights and financial expertise. CFOs have become real strategic partners to CEOs, and I would call them truth-tellers, Cole remarked, emphasizing the critical role finance leaders play in shaping corporate strategies. As Delta continues to navigate uncertain economic waters, Bastian's commitment to maintaining a strong corporate culture remains steadfast. He recognizes the intrinsic link between company culture and financial performance, which has become increasingly relevant in today's corporate environment. Since joining Delta in 1998, Bastian has ascended through various roles, ultimately becoming CEO in 2016. Now he leads a workforce of approximately 100,000 employees, ensuring that their well-being and engagement are prioritized. The implications of Bastian's leadership extend beyond Delta itself. His success serves as a case study for other companies seeking to enhance their competitive edge through cultural investment and strategic foresight. As the business landscape continues to evolve, leaders like Bastian will be pivotal in demonstrating how a focus on employee satisfaction can drive financial success. Looking ahead, Delta remains poised for future growth under Bastian's guidance. With ongoing investments in customer experience and employee relations, the airline is likely to continue its trajectory as an industry leader. As the economic climate shifts, Bastian's vision and strategies will be closely watched, not just by aviation enthusiasts but by corporate leaders across various sectors aiming to replicate Delta's success story. In the fast-paced world of technology and business, significant developments often intertwine, shaping the landscape in unexpected ways. Recently, a series of events has captured the attention of the global market, from political tensions to corporate strategies and economic ramifications. As we delve into these stories, we uncover the complexities of how geopolitical factors, corporate decisions, and market responses interconnect. One notable development involves former President Donald Trump expressing frustration towards Russian President Vladimir Putin. Trump's public venting comes amidst heightened scrutiny of international relations and their economic implications. As the geopolitical climate shifts, Trump's remarks reflect broader concerns regarding trade and diplomatic ties, which could influence market sentiments, particularly in sectors reliant on foreign partnerships. Meanwhile, in the realm of corporate governance, Marine Le Pen, the controversial French politician, was found guilty of charges related to her financial practices. This ruling has implications not only for Le Pen's political career but also for the broader political landscape in Europe. The outcome may affect investor confidence, as political stability is a critical factor for market performance, especially in the wake of ongoing economic challenges. In the automotive sector, Mercedes-Benz finds itself navigating turbulent waters. Despite its efforts to establish a strong American presence, including employing over 11,000 workers in the U.S., the company is grappling with the impact of new auto tariffs imposed under Trump's administration. CEO Ola Kalenius emphasized the company's American roots, stating, "We're also an American company, yet even domestically produced vehicles are not exempt from the levies." This situation underscores the complexities of global trade policies and their impact on multinational corporations, highlighting the ongoing struggle for foreign automakers to adapt to shifting regulatory landscapes in the U.S. In a different arena, the Trump family is reportedly intensifying its involvement in cryptocurrency, specifically Bitcoin mining. This pivot reflects a broader trend as established figures in traditional sectors seek to capitalize on the burgeoning digital currency market. The implications of this move could be significant, as it may attract both scrutiny and investment, influencing the cryptocurrency landscape amid fluctuating valuations and regulatory debates. Lastly, Boeing's stock has seen a decline despite some positive developments within the company. Analysts are puzzled by the juxtaposition of favorable news against a backdrop of falling share prices, illustrating the unpredictable nature of market reactions. This phenomenon serves as a reminder of the complex factors influencing stock performance, including investor sentiment and broader economic indicators. As we look ahead, these interconnected narratives highlight the dynamic interplay between politics, corporate strategies, and market responses. The future remains uncertain, with potential changes in trade policies, political climates, and technological advancements poised to shape the economic landscape. Stakeholders across industries must remain vigilant, adapting to the evolving conditions that define today's global marketplace. The coming months will be crucial in determining how these stories unfold and what impacts they will have on both local and international scales. In an era where mental health is increasingly prioritized, the relationship between nature and cognitive well-being is garnering significant attention. Recent research highlights a nuanced understanding of how the time spent in green spaces can influence brain health, particularly concerning dementia and Alzheimer's disease. While nature has long been celebrated for its therapeutic benefits, this new body of work suggests that there may be a delicate balance between too little and too much exposure to greenery. The complexities surrounding dementia, a broad spectrum of disorders affecting memory, language, and cognitive function, are well known. Factors influencing its development include genetics, lifestyle choices, and social environments. According to the 2024 Lancet Commission on Dementia, 14 risk factors contribute significantly to the likelihood of developing these conditions, ranging from physical ailments like cardiovascular disease and obesity to psychological issues such as depression and social isolation. As researchers like Marco Vinciti from the University of Modena and Reggio Emilia note, there is burgeoning evidence that environmental and behavioral factors can substantially mitigate the risk of neurodegenerative diseases, even in individuals with a genetic predisposition. This shift in focus from genetic determinism to modifiable lifestyle factors has opened new avenues for understanding how our surroundings impact cognitive health. Vinciti emphasizes there is growing and convincing evidence that risk of neurodegenerative disease, including cognitive impairment and dementia, can be substantially reduced by environmental and behavioral factors. One promising area of investigation is the role of green spaces. Studies consistently reveal that access to parks, forests, and other natural environments can lower the risk of physical health issues and, by extension, cognitive decline. Anjem Hadjid, an epidemiologist at the University of Washington, underscores the importance of green space, stating, "Spending time in nature may have other benefits too, like increasing physical activity or increasing time spent with friends and family. Both of these things have many health benefits." However, while it may seem intuitive to assume that more green space equates to better health outcomes, recent findings complicate this narrative. A 2022 study led by Federico Zagnoli found a U-shaped relationship between green space exposure and dementia risk. Surprisingly, while low levels of greenery were linked to higher dementia risk, excessive exposure did not confer additional benefits and in some cases could even heighten the risk. This suggests that living in areas with extreme levels of greenery may correlate with other variables that undermine cognitive health, such as social isolation and limited access to medical and social services. Zagnoli posits that the increased dementia risk associated with high levels of green space is likely due to socioeconomic disadvantages prevalent in certain rural areas where access to healthcare and social interaction may be limited. The findings imply that while trees and open spaces are beneficial, they cannot replace essential community resources that support mental health. Vinciti succinctly captures this sentiment. Aiming for the lowest possible dementia risk is all about a balance: enough neighborhood density to have easy access to services and social support, but plenty of trees for a walk in the park. As society continues to grapple with the implications of these findings, the pursuit of a balanced lifestyle that includes both nature and community engagement remains paramount. Researchers are hopeful that further studies will elucidate the precise mechanisms through which our environments affect cognitive health, ultimately leading to more effective strategies for dementia prevention. This evolving understanding of the interplay between green spaces and brain health not only enriches our knowledge of mental wellness but also underscores the importance of thoughtful urban planning that prioritizes both nature and social connectivity. In an insightful exploration published in the Journal of Human Hypertension, researchers delve into the multifaceted relationship between uromodulin, a kidney-specific glycoprotein, and sodium sensitivity, shedding light on its significant role in hypertension. Uromodulin is uniquely synthesized by the epithelial cells of the thick ascending limb and early distal convoluted tubule of the kidneys, and its functions extend beyond mere renal physiology, touching on broader health implications. The study, authored by Artemios G. Karagianidis and colleagues, presents an updated overview of how uromodulin mediates renal sodium handling by modulating tubular sodium transporters that reabsorb sodium. This reabsorption process is crucial as it is intricately linked to blood pressure regulation and sodium-sensitive hypertension. With hypertension being a major risk factor for cardiovascular diseases, understanding the mechanisms behind sodium sensitivity is paramount for developing effective treatments. According to the review, uromodulin's ability to influence sodium transport could potentially explain the variability observed in blood pressure responses among individuals, particularly in regards to dietary salt intake. The authors emphasize that a growing body of evidence from preclinical genetic and clinical studies supports the hypothesis that uromodulin is closely associated with sodium-sensitive hypertension. The review highlights that individuals with certain genetic variants of the UMOD gene exhibit a higher prevalence of hypertension, suggesting that uromodulin not only plays a physiological role but also offers insights into the genetic predispositions influencing blood pressure.
Uromodulin serves as a bridge between the renal handling of sodium and hypertension, said Karagianidis in an interview. Our findings underscore the need for further research into uromodulin's role in sodium sensitivity and hypertension management.
The implications of this research are profound. As the prevalence of hypertension continues to rise globally, understanding the biological underpinnings of sodium sensitivity could lead to enhanced treatment strategies. This includes the potential for personalized medicine approaches that take into account individual genetic profiles and their responses to dietary salt. Moreover, the review notes that while uromodulin has been associated with favorable renal outcomes, its dysregulation may contribute to adverse cardiovascular events, reinforcing the idea that a delicate balance in sodium handling is vital for maintaining health. The researchers advocate for further studies to explore the therapeutic potential of modulating uromodulin activity in hypertensive patients. As we look to the future, the intersection of genetic research and renal physiology promises to unlock new avenues for tackling hypertension.
With uromodulin at the forefront,
there is hope that ongoing investigations will yield innovative solutions that could transform how we understand and manage one of the most prevalent health issues of our time. In a significant development for international trade, the first batch of Ukrainian apples has successfully arrived in India, marking a new chapter for Ukraine's agricultural exports. This milestone was confirmed by the Embassy of Ukraine in India, which highlighted the collaborative efforts of various Ukrainian government bodies, including the State Service of Ukraine on Food Safety and Consumer Protection and the Ministry of Foreign Affairs. The successful arrival of these apples is not merely a logistical achievement, it symbolizes Ukraine's ongoing efforts to diversify its agricultural markets in the face of challenges posed by the ongoing conflict in the region.
The embassy expressed optimism about this development, stating,
"This is an important milestone for Ukraine and Ukrainian producers who continue to explore new markets, expanding the geography of high-quality agricultural exports." The successful inspection and approval of the apples under India's local legislation underscore the quality of Ukrainian agricultural products and their potential appeal in international markets.
The significance of this achievement extends beyond just the immediate economic benefits. It represents a strategic move towards economic resilience amid geopolitical tensions.
The war in Ukraine has heavily impacted its agricultural sector, which has traditionally relied on exports to several countries, including those in the European Union and beyond.
This new partnership with India could open doors for future trade agreements, enhancing Ukraine's economic stability and fostering stronger ties with a rapidly growing market. The arrival of these apples also reflects broader trends in global agricultural trade,
where countries are increasingly seeking to establish diversified supply chains. As nations navigate the complexities of international relations, trade partnerships that emphasize food security become critical. As such, Ukraine's entry into the Indian market could inspire other agricultural producers facing similar challenges to explore alternative markets and create resilient supply chains. Looking ahead, the implications of this development will likely resonate throughout the agricultural sector in Ukraine and beyond. As the country continues to adapt to the shifting landscape of international trade, future exports may not only include apples but also a broader range of agricultural products.
The focus on quality and compliance with international standards will be paramount in securing a foothold in competitive markets like India.
In conclusion, the successful export of Ukrainian apples to India marks a pivotal moment for Ukraine's agricultural sector, demonstrating resilience and adaptability in the face of ongoing challenges. As Ukraine seeks to expand its market reach, this development could herald a new era of agricultural exports, paving the way for future collaborations and a more diversified economic landscape. With the global demand for quality agricultural products continuing to rise, the potential for growth remains significant, underscoring the importance of strategic partnerships in fostering economic sustainability. In a startling revelation that underscores the complex interplay between air quality and climate change, researchers have linked China's recent efforts to curb air pollution to an alarming
acceleration in global warming.
Over the past decade, significant reductions in airborne pollutants, particularly aerosols produced by industrial activities, have inadvertently led to a spike in the planet's average temperature, accounting for approximately 5% of the total increase since 1850. Historically, China's rapid industrialization in the early 2000s resulted in some of the worst air quality in the world, spurring public demand for cleaner air. In response, the Chinese government implemented stringent regulations aimed at reducing emissions from factories and vehicles. While these measures have successfully improved air quality, they have also removed a layer of climate-modulating aerosols that had previously acted to cool the atmosphere. Kevin Freyer, a photographer who captured the stark realities of China's industrial landscape, illustrates this transformation with images of smog-choked cities and the steel factories of Hebei. However, the benefits of cleaner air have come at a cost. The newly exposed warming potential of greenhouse gases previously masked by these aerosols has raised concerns among climate scientists.
Madeline Cuff, a researcher involved in the study, noted, "While we celebrate the improvements in air quality,
we must also recognize the unintended consequences this has on our climate. The removal of these pollutants is leading to a rapid warming effect that we are only beginning to understand." The findings prompt a critical examination of the balance between improving public health and mitigating climate change. As the planet continues to warm, the implications extend beyond environmental concerns. Rapid climate change can exacerbate weather extremes, disrupt food systems, and threaten biodiversity, posing challenges that society must address collectively.
The research highlights the urgent need for innovative solutions that reconcile air quality improvements with climate stability.
Looking ahead, scientists advocate for integrated approaches that involve not only reducing greenhouse gas emissions but also considering the broader atmospheric dynamics at play.
This dual focus could help ensure that efforts to enhance air quality do not inadvertently contribute to global warming.
As nations strive to meet climate commitments, understanding the interconnectedness of air pollution and climate change will be crucial in shaping effective policy responses. In conclusion, while China's strides in reducing air pollution are commendable, they serve as a poignant reminder of the complexities of environmental science. As we advance our understanding of these interdependencies, the road ahead will necessitate a collaborative effort to safeguard both public health and the planet's climate. Future developments in this field will hopefully lead to more nuanced strategies that prioritize both clean air and climate resilience.